Robinhood is not exactly a popular company at the moment. They're not exactly popular with retail investors. They're not exactly popular with institutions either. And apparently, they're not exactly popular with Berkshire Hathaway, Charlie Munger, or Warren Buffett either. Recently, we of course had the Berkshire Hathaway annual meeting, and we got to hear what they had to say. In short, Charlie Munger and Warren Buffett are not fans of Vlad, they aren't fans of Robinhood, they aren't fans of payment for order flow, and they certainly aren't fans of the gamification of investing. So let's hear what they had to say.
Just tell me about one that hasn't been, but tell me later when the crowd isn't listening. That's where.
Well, look what happened to Robinhood. From its peak to its trough. Wasn't that pretty obvious that something like that was going to happen?
Tell me again what it should have.
Robinhood, when it came out and went public and it got alert everybody and all the short-term gambling and big commissions and hidden kickbacks and so on and so on. It was disgusting.
Yeah. And it says so last year, and they got mad at you, and they sold a bunch of their stock, and they got the money, and
yeah, but now it's unraveling.
Yeah.
God is getting just.
But a lot of the insiders have but they've gotten a lot of money from it. I mean, they were big sellers, as I remember.
That may be, but
yeah,
there's been some justice.
Well, I have to agree with that. Well, it's a good idea to go around making enemies of people, though. That's another question, which we do. Is it wise to criticize people at all?
Probably not, but I can't help it.
Yeah, well.
So that pretty much said it all, really, didn't it? They got their comeuppance. Robinhood were not a good business with a good business model. They didn't put their customers first, or rather, people just don't know who their customers really are. They aren't the people using the app. They're the people who profit off of the people using the app. And we've seen Robinhood's share price absolutely tank recently. It's fallen by 10% over the last month. It's fallen by 45% since the start of 2022, year to date, and it's now fallen 85% from its all-time highs. The big problem with this, though, is that the insiders, the people who are actually with the company from the beginning, people like Vlad, actually haven't been shafted here. They still got a really good deal. Vlad, the CEO and founder, for example, has made $800 million in stock-based compensation over 2021, and insiders were selling their shares an awful lot. So in reality, they're doing okay. It's Robinhood's investors who have been a little bit ruined. Now, this controversy surrounding Robinhood really isn't new. It's over a year old at this point, and in my opinion, it all started when Wall Street Bets and GameStop and AMC really took off and became a major story. It quickly became clear that Robinhood didn't profit off of their customers. They profited from the people who made those orders for those customers through something that we call payment for order flow. Now, very simply, what payment for order flow means that Robinhood are paid by market makers, by people who actually buy and sell shares on behalf of customers to send their trades their way, and they give the people who you would think are Robinhood's customers, the people who have the actual Robinhood app and have their money on their brokerage and buy and sell through them, well, they give those people purposefully bad deals and they profit off of the spread. There have been a load of other controversies surrounding Robinhood as well, like the fact that they just love to start listing meme coins, cryptocurrency projects that really have no utility at all, but when they get a bit popular and Robinhood sees the chance to make some money off of that high spread and the fees that they charge, well, they rush and they pull out all of the stops to ensure that their customers can trade with these useless meme coins and they can make some money off of that. Another big problem with them was the fact that they halt trading on volatile stocks like GameStop and AMC. Basically, when there was loads and loads of buying pressure on a company like GameStop, when the share price was spiking up really, really high, Robinhood would suddenly make it impossible for people to buy GameStop shares and only allow them to sell them, cause the buying pressure to cancel out instantly, to disappear within a fraction of a second, and so the share price of the stock would collapse as well, and this of course cost their customers loads of money, millions and millions of dollars, but Robinhood didn't care because it protected their real customer, which were the market makers behind the scenes. Finally, the other really big controversy surrounding Robinhood is the gamification of stocks and investing. Now, a lot of people get a little bit confused about this, and they think that gamification basically refers to the fact that it's easier than ever to invest in companies just with a couple clicks on your phone that you can keep in your pocket all the time, and with fractional shares and with after hours or pre-market trading and things like that. But that really isn't what gamification is about. Gamification is about turning investing into a party, into a bit of fun, using things like party effects and sounds that make our brains tick happy, using the exact same psychological effects that social media does to keep us hooked, and it basically turns investing into gambling by giving people these dopamine hits in their mind whenever they buy a company or they buy a stock or a crypto or a meme coin. And that is really the problem with gamification, because it takes these sensibilities out of people's investment decisions. It stops it being about what is a good company, what has strong prospects into the future, what has low risk and things like that, and it turns it into just getting that dopamine hit. Now, Buffett came out and said in particular that Robinhood has become a very significant part of that casino aspect, the casino group that has joined the stock market in the last year or year and a half. He also said that there's far too much options volume on companies like Apple, which is causing huge amounts of volatility for the stock, and he suspects that that's Robinhood's work. Now, Robinhood were not happy about this, and they weren't going to take this criticism lying down, and so they came out and spoke, probably against their better judgment. What they said was that there is an old guard that doesn't want average Americans to have a seat at the Wall Street table, so they will resort to insults. The future is diverse, more educated, and propelled by engaging technologies that have the power to equalize. Adversaries of this future and of change are usually those who've enjoyed plentiful privileges in the past and who don't want these privileges disrupted. Their criticisms are unfortunate, but they prove why Robinhood's mission is in fact critical. The new generation of investors aren't a casino group. They are tearing down old barriers to investing and taking control of their financial futures. Robinhood is on the right side of history. Now, Robinhood also made the point that you can't really short on Robinhood, which, yes, is technically correct. You can't literally borrow shares on Robinhood and sell them instantly and then pay them back later, but you can get artificial short exposure to companies on Robinhood using options and other things like that. There are certainly ways around it, so really, that point is a little bit moot. Most of that statement that Robinhood gave, though, pretty much just ignored the actual criticism that's levied at them, and they pretended that there is no criticism of their business model of payment for order flow, but there is. They pretend that people hate the fact that normal people are using Robinhood to invest in their futures, which is just simply not true. No one hates that. We all love that. We hate that normal people are being exploited by Robinhood to generate them revenues. Now, surprisingly enough, this is actually not the first time that Munger and Buffett have spoken, and not in the nicest way possible, about Robinhood. Last year, during Berkshire Hathaway's 2021 annual meeting, they had this to say.
I do want to see how they handle the source of income when they say they don't charge the customer anything. I mean, it'll just be interesting to watch how they describe it. I mean, but they have attracted, maybe set out to attract, but they have attracted, I think I read where 12 or 13% of their casino participants were dealing in puts and calls. I looked up on Apple, the number of 7-day calls and 14-day calls outstanding, and I'm sure a lot of that is coming through Robinhood. That's a bunch of people writing. They're gambling on the price of Apple over the next 7 days or 14. There's nothing, there's nothing illegal about it. There's nothing immoral. But I don't think you'd build a society around people doing it.
If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm and help the channel out. Also, make sure to check out our Patreon and join our exclusive community of investors where we discuss everything about the markets, and you get exclusive private access into my portfolio with buy and sell alerts for all my own investments. There's a link in the description to Masterworks, which can help you protect your portfolio against market crashes through fractional shares of art from world-famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets crashing every day right now. Finally, there's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. It's literally free money, and you can earn interest on your crypto there too. Thank you all for watching. Stay stoic. Until next time.